All right, traders. This is Blake Morrow. You guys are listening to the Morning Edge webinar. Greg, who's North Hero Trading. You guys don't know who he is. He actually used to trade with Gelos years ago. He's my age. He's like a year older than me. Anyway, I'm going to see if I can get him on as an interview sometime with us. Anyway, he's I've never met him in person. We meant to meet up one time when he was in Arizona he was just down the street, and we were going to meet up for a drink, but never did. Anyway, he just made a mention of bonds, and he's like, hey, yields are bonds have rallied back, so yields are coming down, right? So you can see, here, this is better. Yields are coming down; they're coming off their highs. So how much further can the dollar rally if this is happening? And my response to him just now was, it depends how much the yen pairs want to play ball here, because look, in my opinion, the one that's going to be affected the most is going to be the dollar yen. And you can see the dollar yen's following yields. Then the dollar Swiss might actually come under a little bit of pressure. But the question would be, well, how much is the dollar going to rally against some of these other currencies? And yeah, we could see a little bit of a recovery here, but it depends, because if currencies like the Aussie yen really want to start moving, or the Canadian yen, or the New Zealand yen, you can actually have dollar strength and yields weak at the same time. Does that make sense to you guys? Like you can actually see. How many of you guys have been trading currencies for more than 10 years? Go to the chat box. You can. Anthony said he raised his hand, but you can raise your hand if you want, or you can go to the chat box. How many of you guys have been trading for more than 10 years currencies? For those of you that have, you've seen the yen pairs move. And when they move, especially lower, and actually higher too. I mean, but there's a lot of liquidity in these yen pairs. You match up, the yen is the third most liquid currency in the currency market. Then you match it up against the other 7, 8 currencies. You get the yen pairs moving, and do keep in mind, let's just, let me put in a daily chart for these. Like the euro yen, for example, this is a big freaking move. This right here, this is a big move. In currency world, Anthony said, yeah, the pound yen or the guppy used to be a monster. Hell yeah. I mean, but think about this. And in all actuality, post-COVID, it has been, right? I mean, that's a 25% move off the lows. You get some of these yen pairs starting to move, you can have yen strength and dollar strength at the same time, and yields can be going down. Anthony, those days are probably coming back. He said, yeah, the pound yen used to be a monster, 200-300 pips a day. Those, in my opinion, those days are probably coming back. Has to be maybe a little bit with yields, with bonds. We need. I'm sorry, guys. I didn't tell you guys earlier, but last night was one of those nights that I tried to go to bed, and it was so it's so hot here. It's like, you've heard me complain a lot. It literally took me 2 hours to fall asleep last night, and that happens when it's so hot. That happened to me last night. So if I'm yawning, I'm just going to tell you guys, if I'm yawning, that's the reason why. I mean, I'm usually tired this time of day, but it's extra bad today. Anyway, I'm just saying, if yields really start to fall and we start to see the 10-year really come under pressure here, I mean, you can see that we are in a flag pattern, and you guys knew I was bullish yields off of this support here, but now we are up against some resistance. So we see a little bit of pullback in yields. you know, we could see the yen pairs come under further pressure, I guess is the point I'm trying to make. And Raj says, your sneezes wake me up and your yawns put me back to sleep. I know. I'm so sorry. I am so super sorry, especially the yawning. The yawning it kills me because it's like, funny thing is I'm like super sharp this time of day, mind wise. It's just I'm like I keep yawning always. You know, I mean, how do you not when you wake up at these ridiculous hours of the day? Okay, let's get started. We're gonna get. Let's start with analysis. So euro dollar. One of the big things that I think we have to realize with the euro dollar is we are making lower highs, right? But also we are making higher lows. So this, to me, seems like, and I might be a little crazy here. It seems like we are making a longer term triangle pattern. And why is that important? Because I think we're going to get a really big tradable bounce down here. Whoops. Like not today. You know, I'm talking probably here in the next week or two. You know, we might see, you know, we might see equities sell off a little bit here over the next week, and then the dollar, you know, continues to find some footing. We're below the 200-day moving average in the euro, and you know we might slump down to 118, and then you know eventually find some buyers down there. That's what I think is going to happen, and I think worst case scenario is over the course of the next 2 weeks, this is a tradable bounce area, right? That's like, you know, we could end up doing this. But regardless, this is going to be a tradable bounce area, in my opinion. We'll have to see what's happening at that moment in time, but that's what I think is happening. That has nothing to do with what's happening today. So what, I mean, it does, but so let's imagine this. If we get a little bit of a dollar pullback, let's look to, you know, find some sellers up here at 119.80. I actually think we'd be really lucky to make it up there today. Near term, we're bearish. Okay. Obviously, while you know, it was the right call. A break below 120.90 was bearish. You know, but as I was saying, the guys and gals in the chat room, I'm looking to buy the dollar Canadian back below 123. So, you know, we're as a matter of fact, let me put that in right now.
Was that birds or you? That's birds,
Me.
isn't it?
No, that's me.
Okay.
No, you won't hear birds for the next 3-4 months because
you shot them.
I shot them all with my BB. I'm just kidding. No, because it's too hot, so I don't open my windows. I won't open my windows for the next 3 months. They're out there. Believe it or not, I don't know
how they survive.
You know, what's crazy is my neighborhood, it bums me out. For those of you that don't recall, several years ago, I used to have lovebirds, right? I had lovebirds in my house, or in my house, at my house. And my the story goes is lovebirds actually came into the area. This 127% extension is going to be important. 119.07. If we make it to 119.07, we should bounce. So I'm going to say 119. That should be significant support. Anyway, we had lovebirds in our area because the story goes that somebody let out the lovebirds years ago, and then they started multiplying because African lovebirds can live in our environment, right? They're green with the, you know, sometimes white or red heads, those types of lovebirds. Anyway, so in where I live now, there's probably 1,000 lovebirds, wild, right? They live in the cactus, and in my old house, about 2 miles away from where I live now, we did a lateral move a few years ago, like 2.5, 3 years ago. We did a basically same price house, just different part of town to get closer to the freeway, get closer to my kids' school, that type of thing. And to make it more, it's a better layout for working at home. And this is pre-COVID, obviously. So this is where we're going to find resistance in the cable, 140. So when we moved, the lovebirds stayed obviously at the house. And when at this new house, the lovebirds live in the cactus around my house, but they don't come to my house because I don't have any cactus. And it bums me out because they're so beautiful, and they are so they're just fun to watch, and I love feeding them. But I got to tell you guys a story. Back in my old house about 3.5 years ago, I used to feed the lovebirds. So every day I would feed probably 20 lovebirds outside. It was really quite cool. So you can see this neckline of this double bottom held as support. So that's key support today. 139.17. Below that is 139. So I'm going to put in 139 just in case we make a new low. Anyway, I'll just wrap up the story. I used to feed like 20 lovebirds every day for years. And so it was so hot one summer. It was heat like this. And it was like 115, 118 degrees outside. And it was in the middle of summer, probably like July of, probably 3-4 years ago. It was so hot, and it was so dry. And my wife said, hey, Blake, there's, you got to come to the window. And over at the window, there was a lovebird, a smaller lovebird, not even, it wasn't a full grown, but it wasn't a baby bird either. It was sitting there knocking it was knocking at the window. We had a big glass window at the other house that we could see through our whole front lawn or front yard. It was knocking on the window, and it was so hot, it was like the middle of the day. And I looked at the bird, and I'm like, oh my gosh, it's probably dehydrated. And it just sat there. Like I tried to shoot away, like, come on, keep moving. It wouldn't leave like the ledge of the window. And so I went out there with a box, and I put the box up to it. It jumped in the box. I left the box open, brought it inside, and I took it to there's a lovebird rescue, which is actually about 30 minutes north of where I live. And I took it to the rescue, and they're like, yeah, I think it's dehydrated. And I'm like, man, it came to my window looking for my help. So
for the shockers,
amazing.
For the shockers, I was expecting some kind of absolutely non-political correct ending, like, and we had dinner that
night. I love those little birds. The problem is they won't come to my house now because I don't have a cactus, and they don't know that I'm more than willing to feed them like all day long, every day. But I try to put food out. Problem is that the food, if it doesn't get eaten, it brings in rats. And so anyway, yeah, it sucks. But yeah.
Where do they find water, by the way?
What?
There in the desert. Where do they find water to drink in the desert? Out
Pools,
of curiosity.
A lot of people water lawns because, believe it or not, we don't have a water shortage here because our attorneys in the state has made some pretty good deals for water rights from Colorado. So we get all of our water that comes up from from the mid, from Colorado, and it comes all the way down and provides us water here in the valley. And that's why that's why we've been able to grow, because of our water rights that we have from other states. So there are older parts of our state that do not have water restrictions, which we have water restrictions on a lot of the newer parts of the state. That if you live like north of where I live, you can't have grass. You have to have natural habitat. So you live out in the wilderness, your lawn has to look like the wilderness. You have to have desert landscape and blah, 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 blah. Supports here, 75.30. So, and this is going to be key before we continue the breakdown of this triangle, by the way. So we should break down towards 74 eventually, and maybe even towards 73 and change moving forward. But we got places to stop first, one of them being here. Anyway, so there are, especially in places where I live, where we have lawns, we actually, like, for example, my sprinklers go off probably 4 or 5 times a day for 5 minutes. It just basically gets the ground wet,
Yeah, and they come and drink.
Yeah, and they'll come in and grab a drink and stuff. Yeah, exactly. So anyway, so here's your kiwi. So you guys hear a little bit of personal story with my lovebirds, and I love those. If you follow me on Twitter for any length of time, you've seen pictures years ago. In my old home, I used to take pictures of those lovebirds all the time. 89.80 will be the 88% retracement, although I do feel that we are going to go down and see 69.50 again without much issue, but that doesn't mean we're going to go down there today. 70 cents, well, this is support right now. And the 88% retracement comes in at 69.85. So I'm going to actually write that down today, because I would think that stops below 70 cents could get taken. But I would imagine that if a lot of these currencies like the euro and the sterling, and if we hit new lows, there's support just below. So I think that if we hit a new low here, you're going to get a bounce right after that. I think we're divergent enough intraday where we can see that. Now, any move back up towards 71 cents is a short. So and the sterling, by the way, this is bearish. You're going to have everybody dreaming about double tops right now. So you got to be able to sell it on a move back up to 140. I'm looking to sell the sterling back at 140 or somewhere close to that in the next day or two. And as I was telling people in the chat room, whatever you're doing with the dollar, just be really careful. I personally am hoping that like the dollar Canadian right now, I have a bid at 122.90. I just put it in just 122.905. So basically, I know you guys are going to try to front run me at 122.91. I'm sure you guys just put in a bunch of bids, which is fine. But I want to buy it on a dip. I'd rather play the dollar on the long side, right? So I do think that 75 is going to be resistance here. That's the previous support. So, but you got to be a buyer down at I would say 122.80. And remember, this is all
Blake. So, Steve, we can hear the football commentary in the background. Can you mute, please? Thank you.
Oh, I thought you wanted me to make it louder. Sorry.
Thanks, man.
He eats food and watches soccer.
Dude, first of all, call it football because it's the only sport that actually people play with their foot, and the thing is a ball. Second of all, we have the euro. You know that, right? It's like
guys. Did you see Chad's comment? Totally confused on the charts today. Are we on a lovebird pattern or a bat? That's so funny.
But you see the amazing way we're able to mix lovebird habits with technical analysis.
Oh, funny. You guys are funny. So any dip down to 91 cents, see we're back above the 200-day moving average. So and it's been a hell of a squeeze with the dollar. So just buy pullbacks. 91 cents will be a decent level for the, and everything right now is counter trend. So when you see all this bullish and bearish, bullish US dollar, it's all counter trend now. And I expect that to last. Like I told you guys on the FACE webinar, I actually, oh, it's the dollar index. This is the better chart. I actually think that this is a wedge. So, you know, the dollar still has some upside here till 92.70, 92.60. That's where if you want to short the dollar, that's where we do it. That's going to be the buying the euro down here at 118 play, right? It's tradable. It's going to be a tradable bounce up there, or it's going to be a tradable sell up there, a dollar sell. Okay. US dollar, Norwegian krona. I am long this, and I'm pretty aggressively long, and I'm actually buying dips right now, actually. I'm going to add a little bit right now. And I'm going to add a little bit more down at 845. Oh, shoot. I forgot to do that. Dang it. Looking for, this is the 78% retracement. So this should be good resistance today. 857, 858, 858. This is bullish. Now, remember, we did come out of a descending wedge, and it's just taken a month to finally break out. You know, I've been early on this one. I've been, you know, nibbling along for weeks. It's like I told you, I think I told you guys earlier this week, I've been in and out long this thing probably 4 or 5 times through this. You know, I'd buy it, fail, sell it for a flat, sell it for a small loss, buy it here, come back, make a small profit, you know, take a flat on the rest, buy it again, you know, it's the same crap over again. Finally, it broke out. So now you got to be playing dips like this for a constructive move, you know, hopefully past the 200-day moving average back to 9. That's what I'm thinking. So, sorry, I got to go back to the dollar Swiss. So dollar Swiss resistance to be right here at 91.65. And remember, we're above the 200-day moving average now. Dollar Norway, got that out of the way. Dollar Mex. This is the 200-day moving average. Expect dips back to 2032 to offer support. I think we're bullish while we're above 2030. And resistance, obviously 50% is holding, so at 2061. Hold on 1 second, please. Okay. Picked up some dollar max here at the 200-day moving average. Small, I'm adding all the way back down to 2032. This whole, this is actually drawn incorrectly. This should be drawn like that. All the way back down here to 36. I'll 30, 32, 33. I'll be buying all the way down here, just adding little bits and pieces.
Just look at the S&P rebound.
Yeah, and I would sell right into this because I think yields coming down. People are going to
Yeah, it still amazes me the faith with which, even after everything reversing yesterday, there are people that they're just relentlessly bidding, right?
It's crazy. It is crazy. Dollar yen, 110.25. Target should be up here just above these highs. So 111, maybe even 10. This trend line here, we could actually pierce a new high, but I'll put it in 111. This is a range. I don't want to be bullish just yet for the dollar yen. Dollar index, 261% extension of that sell-off hit 618. So 92 will be big resistance. We should find support now at 91.40. Near term. Gold's bearish. So that slide below, that was the right trade yesterday. As I said yesterday, you guys you could really just say I'm going to skip FX and I'm just going to short gold if it breaks below the 200-day moving average, and that could be your only trade. And that was it. We slumped below 1800, which it's a pretty big deal. 618 comes in at basically 1770. That's our next level support. And I'm going to say this: while Bitcoin's in the picture, the millennials went out here. While Bitcoin is still in the picture as a safe haven. Now, I know Steve I'm going to ruffle his feathers here, but the way people view Bitcoin, which I think is completely horse crap, but people view Bitcoin as a proxy to gold.
I will indeed have to disagree with that. I mean, there are a lot of people that believe that, but those are not the people that have the lots of money.
Yeah, but I think it's more of like an attitude, Steve. Look, I don't think we can deny the fact that if with all the inflationary pressures that we've seen, and let's do this really quick, okay? Really quick. Right? We've had this inflationary fear for the last several months. And what where the hell? Oh, excuse my language. Big move in lumber, right?
Mm-hmm.
Big move in copper. Big move in...
Yeah, all commodities.
Oh, okay. So as a trader of the last 25 years, the natural reaction in the market, in my opinion, would have been, oh crap, I gotta hedge my this commodity move. I'm getting long gold. It is, and then you have people shoot theory. They're like, oh, what's inflation's? Is gold really an inflation hedge? That's been people's recent argument, but it's like, no, but historically it has been, right? Like historically it has been. So I guess the question is, well, why hasn't gold, matched these all-time highs? Why hasn't it moved up with the rest of the commodity complex? My only answer is, and we could say, well, maybe it's affected by real yields or something like that. But really, my only answer is that I think there's been an alternative that has jumped into the fold, and that's been Bitcoin. And when people say, I want to buy something, you had Paul Tudor Jones just 2 days ago. Do you know what he said? He said
has 5% in Bitcoin
and 5% in gold. That's you would have asked him that question 10 years ago, Steve. He would have said you would have 10% in gold.
I
Guaranteed.
don't think so. Guaranteed you're wrong. Because guaranteed. I bet that if you ask Paul Tudor Jones why he owns Bitcoin and why gold, he's going to give you two completely different answers. That's my point.
Okay. But you know what? I don't.
He owns one for beta and the other one as a hedge.
I'm going to agree to disagree with you.
Okay.
We can agree to disagree. Doesn't make you right and doesn't make me right. I'm just saying that gold hasn't acted like it should historically under these circumstances. Based on my experience, I've always seen gold rip higher as an inflation hedge, and it has failed to do so. It has failed to do so this time around. And people can argue, well, Blake, it's just okay. I guess, you know, I guess the, you know, what is that? What percentage is that? I can't even read it. It's so ridiculous. I guess a 600% move higher in lumber since the post-COVID lows is transitory. Again, you know, it's like, I think inflationary pressures have really shown that it has been an issue, and gold has just not responded. So I don't know. I mean, it is my opinion. Doesn't make me right, but it's an opinion. All right. Gold. Let's talk about gold. And so gold, in my opinion, at this point is a natural short because it has failed miserably to respond to the market. And on a weekly basis, and believe me, I don't like saying this, I own gold. I own precious metals. Physical. I'd love to see gold at, I would love to see Bitcoin at 0 and gold at, I would love to see gold at 5,000. Unfortunately, that's not the case. And I personally believe that the reason why is because there is an alternative to gold right now. But that's, again, any move back now up to 1805 should be a sell. And on a weekly basis, we are making lower high. And that doesn't bode well for silver either, that we are making these weekly lower highs. We found support at the 50%. The 200-day moving average is at 25.65. Resistance going to be at 27. Any rally back to 27 should find sellers. I think we're bearish near term. Actually, you know what? I think we should probably just keep silver more in a range. This looks more rangy than anything, but it has been acting better than gold. So I think if you're going to buy precious metals, silver has been the better vehicle to do so. Bitcoin still below 43,000. And while we're below, this is, in my opinion, still a pennant. Probably looks more like this, right? There's your flag. So I still think while we stay below 43, 42.5, you have to stay bearish. Supports at 30K. This is key. I don't think there's a whole lot to do right at this moment, other than if you get closer to the 40,000 mark, you want to be a seller. S&P, as Steve pointed out, it's unbelievable how strong stocks are. But that looked like it was some order flow that went through, pushed us right up against resistance. So that resistance or previous support should be current resistance, 42.30. And we have to stay bullish while we're above 41.70. But a break below this, it turns instantly bearish. We don't even go to range from there. We go from being an ascending wedge to a reversal. So a break below 41.70 would be a bearish event. And that's it. Good news is there's a lot less yellow today than there was yesterday, right? Finally, yeah. So, all right, Steve Stelios, I'm gonna pass it over to you, and we'll talk to you guys soon.
Thanks, mate.
All right, thanks, guys.
Let me just paste the bias chart onto the chat room. Boom, done. Okay, so
Boom,
we,
boom. Go back to your room.
we, we're getting
Oh, by the
some.
way, I just want to say for those of you that are listening in, obviously, I just want to let you know I'm doing an interview with Mark Chandler, and I'll be doing my first interview with Bill Barak, which, by the way, he's going to give us a commodities update. But I'm gonna ask him that question about, you know, how he feels about it and inflation moving forward, just from a commodity futures trader's point of view. So anyway, you'll see that you'll see those interviews hopefully within the next 24 hours. Thanks, guys.
Awesome. Thank you, Blake.
Thank you, mate.
So we got the Fed yesterday, giving us some hope. Episode, what was it? Episode 4, A New Hope. Anyway, we're getting some hope. Although, you know, basically what they said is that they're going to start to talking about tapering. So it's not that we're getting something yet. If you look at Fed fund futures and Eurodollar futures, compared to yesterday, so pre-FOMC, we were before pricing one hike by end of next year, end of 22, and another 2 hikes by mid 23. We are now pricing just a little bit over one hike by end of 22. I think like 2 basis points difference, and or 3 or something like that, and then maybe 10 more by mid 23. So really, in the grand scheme of things, the market wants to believe it, but it's not going full tilt yet. And you know, because it's one thing for them to say that we're going to start thinking about tapering, and it's a completely different thing about them doing something. The interesting thing is that we did get obviously equities a little bit lower yesterday. They're coming back today. The dollar is strengthening, but obviously, as always, it's the metals that got are the most sensitive for some reason out of everything, and it makes me laugh because, you know, people are saying, "Oh my God, yields are going to rise." Well, look at the real yields. I think they're like minus 5% at the moment, and the prospect of them going from -5 to like -3 or something like that is just make them crap the bed, which is completely wrong in my opinion. But anyway, you know, it is what it is. You know, they always try to slam the metals.
Speaking of which, Stelio, if you remember, I had talked about that several times in the past, and we had this conversation. There was no doubt that at some point the market would have to reprice the path forward somewhat, right? Because of some statement or lack thereof or whatever. Now, in my opinion, this is an event. The Fed was extremely dovish once again. It was just like, you know, negligibly less dovish than the market would have hoped, right? So I think this produces an opportunity to buy things at a better price. As simple as that.
I agree with you.
I do believe that yesterday's move were technically important. So oppositely from the other times, and I showed that because quite early on the day, I went in the chat room and said, listen, after such a long period of time, I'm taking profits in my USD NOK. I didn't even wait for the day to close because I was certain, you know, it would be a breakout. So I do think this move has probably legs to go. I do believe it's completely based on false hope of what's going to happen, but it doesn't matter because what matters is what the market believes, right? So I think this move, how long it's going to end up lasting, I don't know. Is it going to be like 5 days, 10 days, 1 month? But I do believe it's just going to create amazing opportunities to buy things at good prices. As simple as that.
Yes, absolutely. So anyway, you know, the dollar is finding strength, and it is breaking against quite a few pairs.
Yeah, this is technically how do you distinguish a move from being like a very simple shallow correction than not. Look at this channel in gold, right? As long as this was holding, this was another very common type of bullish consolidation. Once you break through this channel, you know something different is up. Look at the DXY, the exact opposite, right? What were we saying? As long as this, by the way, I haven't touched my drawing since yesterday in most things because, you know, it was a good opportunity to see them like together, right? We said as long as this channel is holding in the DXY, this is another shallow rebound. We broke through it, and quite decisively. What did we do with the euro? We did the exact opposite thing, right? We had this channel, we sliced through it that it was like it wasn't there. What did we do in the cable? We had this channel, we broke through it after a long period of time. Somebody can even, somebody that would want to look at it shorter term could even have drawn this channel here.
By the way, afterwards, I want you to see a specific chart.
Absolutely, mate. Whatever
Yeah.
you want.
Yeah.
So somebody could have drawn this channel as well. We sliced through it, right? So
Yeah.
these type of moves, and there were two indications that I kept mentioning. One was the 10-year yields that were on support, and this was a textbook like corrective move. I think we're going to end up breaking higher, by the way, here. The other one was the Kiwi, because the Kiwi, I kept talking about it. The Kiwi had a very different type of correction than the Aussie. We had one move lower, one move higher with corrective characteristics, and there was one move lower missing, most likely. So the Kiwi was pointing to new lows, oppositely to the Aussie. The Aussie was looking like it was creating a symmetrical triangle. By the way, this, typically speaking, might still be the case because we're just a few pips below the symmetrical triangle's trend line support. And who knows, by the end of the day, we might even close above it, right? Although I doubt it. I think that from the type of moves I've seen, I think that now the chances are, higher that we're going to get this type of a corrective move lower, meaning, probably like a channel, so there is more downside, right? And I do think that the Kiwi is going to produce a lower low, as it was one of the two scenarios. So I do think that we can see the Kiwi move lower from anywhere between 68.5 cents to even 67.5 cents, right? So I think there is more downside here as well. So I do think that whatever we started doing yesterday, most likely is not going to finish in a couple of days. So I do think that we're going to unfold some kind of a decent counter trend move, and it's going to be decent enough for people to make money trading that, right? Or if you're like a longer term trader and you just want to be in the direction of the trend, then you need to be patient, and you'll be able to buy a lot of the things you might have liked to at a much more attractive price. And the same applies with precious metals that we said, Stelios.
Yeah, Steve, have a look at one chart. Okay, do SPX 500 divided by gold. So divide by XAU USD.
Oh yeah.
Have a look at where that is historically. Go on a weekly chart. Go on a weekly chart, and you'll see what I mean. If you go further back, it goes a little bit further back. You want to get to 2008.
Mm-hmm.
Nope. What happened? So basically, we're at the same levels where we were 2008, 2018, or 19, and late 18. And you get into levels where, exactly, the S&P compared to metals or gold in particular is getting very, very frothy. Just something to keep an eye on. Actually, there's a question. Our friend, I don't know, it only has an initial. It says, I think his name is Chris.
If I was Blake, I would probably singing cup and handled knees and toes.
Yeah.
That would.
It says, how do you analyze real yields on TradingView? Well, I don't think you can, because real yield is the let's say the yield or the 10-year, whatever you want to see, minus inflation. So
it's a nominal yield minus inflation. Yeah. So that's one of the big problems with real yield. It's that it's not real. And the reason it's not real is because when we're talking about inflation, you by default take a measure that's unreal,
which is,
meaning the way they measure it, unfortunately, is extremely skewed. I mean, the inflation calculation has been reverse engineered since a lot of years ago to understate inflation. Irrespective of that, of course, irrespective of the understatement, the trends and direction are captured by inflation. It's just everything is understated, right? So when they tell you 5%, it's not 5%, it's a lot higher. But, going from 2% to 5%, you still see that there is a trend for higher inflation, right? Now, irrespective of the fact that, as I said, you should definitely not trust the inflation numbers. They're always extremely understated. And I've explained in a separate webinar in the past the 3 ways through which governments and the methodology are understating inflation. To summarize them without analyzing them again, one of them is substitution. The other one is hedonic adjustments. And the third one is by outright lying. I mean, we've seen concrete evidence that even in things they supposedly measure, the numbers come out extremely weird based on things that you can check. Via these 3 methods, they are massively understating inflation.
Yeah.
So what were you saying, Stelio?
No, that's what I was talking about. That chart is very interesting. Anyway,
yeah, it is. Once again, near resistance at these levels. Yes, absolutely. And I have to say that the move lower in this ratio had mostly corrective characteristics.
Yes.
Yeah. So technically speaking, if you showed me this chart, irrespective of my fundamental beliefs, I would tell you that this chart looks very bullish to me.
Might be
because it does.
Blow off top.
It does look very bullish, technically speaking.
Yeah. Yes.
And think about it, Stelio, right? If we assume, and I'm not going to go into this conversation, that there is manipulation in the markets, which way is gold manipulated that, and which way is the S&P manipulated that?
Yeah, exactly.
Right.
The other side,
yeah, exactly.
Yeah. Anyway, yields actually is another thing worth pointing out. The 10-year yield in US went up like 7, 8, 9 basis points, whatever yesterday. It's coming back. It's coming back down now, so it's not really impressed by the whole thing.
That is true. Although I have to point out again that, in my opinion, this is a corrective formation. So I do expect eventually, as we drew back there, that no matter how much time we spend consolidating this, I do expect that there is going to be a bullish breakout in yields. Now, how far higher they're going to let them climb? Unfortunately, I don't have the answer to that because it matters. It really matters because this is not a free market, right? This is not a free market. I mean, this is not a conspiracy theory. We know that the biggest buyer in this market is the Fed, and in all these markets are the central banks, right? We know that they don't want yields to go high because there is unsustainable debt all over the world. And we also know that there is not a single investor on the planet that would be okay owning an asset that produces a coupon of, let's say, 1.5% per year, and tie up his principal for 5 years, 10 years, 20 years, 30 years, when inflation has been running above that for as long as we can remember, right? So there is not a single investor that would be okay buying this if they didn't know that there is a bigger buyer they can offload to.
Yes. Yeah.
It's simple mathematics. I mean, it's not like rocket science.
Look at the move in lumber, man.
Yeah, it
crazy.
It's it was an inevitable.
But it's gone.
Because parabolic move higher.
Yeah, but in 1 month it's gone down over 50%. It's incredible.
Yeah,
but then again, it had gone up massively. Yeah,
because the move higher. Do we remember the
LBS1?
LBS1.
Yeah, LBS1, and then I think it's an exclamation mark to get the first one.
There it is.
Yeah, that continues. Yeah,
there it is. So parabolic move higher is in need of a parabolic move lower. Now, what hasn't changed, in my opinion, though, is that this move is not going to retrace back there. You can forget about it. So I think we're approaching a first very, very, very good area of support. This one, roughly at 800. What I would expect in essence from this, if you want a more detailed expectation of how I expect this to unfold, would be something like this. Something like this. So yeah, don't try to catch a falling knife here, but I do think that we're getting closer to levels that you're going to see rebound. So keep that in mind.
Yep.
And this is also another reminder in favor of the free economy, that there is no better cure for high prices than high prices.
Higher prices.
Yeah, that's very true, because price is the mechanism with which demand and supply rebalance, right? And that's a good argument for never ever having a government impose floors or ceilings to any product. Having said that, as I said, I think that once this sharp move lower finishes, we're going to find ourselves in a different equilibrium than we had before, meaning I think the new equilibrium for lumber and everything else that's tangible is going to be higher than it used to be pre-COVID. So keep that in mind. And when I say pre-COVID, I don't mean like the move we had lower when COVID began. I mean completely pre-COVID, right? I mean before we, let's say November, right? 1.5 years ago, before anybody cared or knew about the existence of COVID-19. So once these markets rebalance, the new equilibrium is going to be higher than it was pre anything that had to do with COVID, and the trend and tendency is going to remain longer term a bullish one. So keep those things in mind.
Indeed. Actually, that lumber chart looks really good. I think it's we're really close to a reaction.
Yeah, I do think that as well.
I like it.
Let's see also if there is a FIB there, since we are talking about it. Let's see. 61.8 as well there. You see?
There
Perfect.
you go.
So a very, very, very nice level for a reaction there. There you go. There you go.
Nice.
So around 800, 820, very good area of support. Very good area of support. Anything else you wanted us to check, Stelio?
No, that's all I
How
have.
is the uranium thing reacting since yesterday, by the way?
It's going lower. Remember, I sold
how is it called?
URA. Have a look at it. Remember, I
URA.
sold. I sold half of mine at 23.30 or something like that.
Yeah, and
remember,
and
I was showing it to you. Yeah.
If you remember, we had drawn that. You remember
Yes.
that I said I was very, very skeptical because of the nature of this price action that we had higher. It looked like an ascending wedge. And if we do break through support, which to be honest is very close to where we currently are, support is currently passing roughly from 21.5. I think we're headed back to 17.
Yeah. Well, I'll be buying again down there for sure.
Yeah. I think 17 is going to probably be a very good level to buy. 17,
yeah, all these are getting they're getting sold yesterday and today.
Yeah, it makes sense. I mean, they had massive moves higher at some point.
Yeah,
they had to deflate.
Yeah, of course.
And this was a good opportunity, right? The market found an excuse, in essence, to get rid of so much froth that there was, technically speaking.
Yes. And weak hands are getting shaken off. I mean,
of course, which is needed. It
happens
healthy.
all over and all over again with every market. It's always the same.
Exactly. Speaking of the precious metals, nothing has really changed with silver. We're still in a big symmetrical triangle. I very much doubt we're going to end up breaking below it. And I say very, very, very much doubt we're going to break below it. I don't expect we're going to see prices of silver dip below $23. And closer to 23, I think it's going to be an excellent buying opportunity. Personally, I'm telling you in advance so there are no misconceptions. I'm buying shitloads of silver at 23.60. Just to make it very, very clear, right? 23.60, 23.75. I think it's a nice first area of support. If we get there, I'm buying shitloads of silver. As simple as that. And I'm holding it for eternity.
Yeah, I'm with you, man.
Yeah. So because I don't have silver, I have gold, but I don't have silver. As simple as that. Now, having to do with gold, we're back within the bigger channel, which means that the corrective formation is different. That doesn't change the fact that I think we're headed much higher. Now, from which level? The next area of support, because we've sliced through a lot of them. First of all, from this point on, I think that 1810, let's call it, 1810 is going to be resistance. So anything below between 1810 and 1850 is the resistance area. So if I was a short-term trader and I wanted to trade this market short-term, which I don't, I only want to have long exposure to anything that has intrinsic value. But if I did want to trade this market like this, I would be comfortable shorting anywhere between 1810 and 1850. So let's rework all that. So I would short anything like this for an extension towards 7050 first area, 1680 the next one, right? Something like that. So I think in the short term, you have every reason to want to be bearish gold. You know, if you want to trade it like shorter term, you have every reason to want to be bearish gold. Same applies to silver, but you know, keep in mind the general context, right? And the general context is the one we said. We're talking about a counter trend, shorter term move, right? And by shorter term, I don't mean a few hours or a few days. It might even unfold to be a few weeks, but still the general trend remains that, okay? Meaning higher. And same with silver. Silver can dip towards 2470, 2360, 2370, and $23, right? None of that is going to make it bearish. I think in the case of silver, if we want to talk shorter term, right? Might see a move like this. That's what I would be looking for, something like this. Okay. And as I said, I'm gonna really view this as an amazing buying opportunity. As simple as that. Now, I mentioned in the previous webinar, and I think that's important, that I do think we have also very, very interesting developments in the yen complex. And don't worry, we will take more time today if needed to go through your questions as well. So whatever I don't cover, I'm going to go through your questions and I'm going to cover it. So why did I say that? Because let's start looking at them one by one. Here is Euro yen. Look at this blue channel, right? Held up nicely so far. Let's also extend this, by the way. Previous wedge trend line support. There you go. You can even see this as an overthrow, which is a very usual thing, to this larger wedge. But even if you want to focus shorter term, look at the blue channel, which we're breaking through as we speak. So Euro yen seems to be breaking down. The implications would be for a deeper corrective move lower. Look at pound yen. Got rejected from this channel, right? Even within the confines of this channel, a lot of room to move to the downside, right? A lot of room. Now, comparatively speaking, you'll see that the gappy, the pound yen, is holding much better than some of the, and it's looking much better than some of the other yen pairs. Bottom line, what I'm trying to say is, you know, if you want to be short one of these pairs, you know, don't choose the pound yen, right? You always want to, when you want to be short something, you want to be short comparative weakness, and when you want to be long something, you want to be long comparative strength. So look at the Aussie yen. Now, I was monitoring this channel in the Aussie yen for quite some time, and then we broke above it. And then above this, we formed another triangle, right? With the previous channel's trend line resistance being support and another trend line as a resistance. And look at it. We're breaking down today from this one, which tells me there is more room for downside. I would say easily towards 81. Look at Kiwi yen. Ascending wedge, we're breaking down today. That would point to a move back towards 73.60, 73.60 and change. So, interesting moves in the yen complex. And the fact that it's happening to all of them almost at the same time, add to that the fact that we had big reversals in anything that had to do with the market yesterday. I think you shouldn't try to fade these moves. There are most likely genuine moves, right? Now, let me also mention the USD NOK. As I said, I closed yesterday my short position after a very, very long period of time. That was one of the best trades I've ever taken in my life, and held to it more than I've held to probably any trade in my life, other than owning physical gold, of course, right? Why did I do this? Because it was more than clear that we would slice through this trend line resistance, and because it's clear in my mind that there is a very high probability that we're going to see follow through in the days and weeks ahead to what we got yesterday, right? Now, fundamentally speaking, nothing has changed. I believe that the NOK is one of the best currencies to own, especially against the dollar. So, after some time, I'm going to start looking for shorting opportunities once again. I want to be a seller once again of this currency pair, right? But until that happens, next resistance is roughly at 860. After that, towards 890, so on and so forth. We see how it goes from there. Anyhow, let me go through some of your questions. Could precious metals spend the summer being in a bear market? I assume you mean. Yeah, I guess they can. I doubt it's going to last so long. I can tell you in advance. So I do believe that this sell-off might last longer. Do I believe it's going to last the whole summer? So another, let's say, 2.5 months? I doubt it. Nothing is impossible, but I doubt it. I'm looking for this corrective move to last less than that, right? Probably more than a couple of days, clearly, as I said, but no, not 2.5 months. I think the market participants are going to come much sooner to the realization, as I've been saying before all this happened, that no matter what the Fed signals they're going to do, they will still remain far behind the curve. And once market participants come to that realization, I think they're going to pile back in to the positions they previously owned, especially since they will be able to own them at a better price, right? So that's what I think about it. Palladium, platinum. Okay. Okay. Here is platinum breaking through this, which makes it very unlikely that we were finishing up that corrective move and we have to go back to the previous scenario, that there is one leg missing here and the move we were talking about towards 1000 to 1040, right? So that's where I think we're headed. One move lower, corrective rebound, another move lower, and after that, I think this market is headed much higher once again. Now, here is palladium. Now, having to do with palladium, earlier when we had this discussion with Grega, we were 5% lower. We're currently 7.5% lower on the day, right? So, as we saw with the other instruments, as long as palladium holds this channel, there is no technical damage done yet. But if we slice through this channel, then we should be looking for lower prices in palladium, 2,500 being the first downside target, and then we open targets like 2,250, so on and so forth. Grega, for those of you that weren't before, or for those of you that are not very familiar with Elliott waves suggested that what we might be seeing here might be part that, in essence, the corrective move from this high might not have been the symmetrical triangle, but it might have been a longer term, more complex corrective move, which is an irregular, an expanded flat, which would be A being this. Let me give it a different color. Okay, A being this, B being this, C being this, and then a resumption of the uptrend. This is called an expanding flat. Why? Because you get a move lower, then a higher high, which is very, very devious because it traps people being bullish at the wrong timing. Then you get a sharp move lower to produce a lower low than the initial low, which then creates the exact opposite thing. Makes a lot of people bearish, a lot of the bulls capitulate, they sell just because we now have lower prices, and then the correction is over and you're headed higher. So Gregor suggested that perhaps this might be part of an expanded flat. Now, it's too early to assume such a long-term corrective move is unfolding at the moment, but I can tell you that, focusing in the shorter term, watch this channel's trendline support. As long as this holds, there is no technical reason to be so bearish for the time being, right? Actually, the trend remains higher as long as we hold this trendline support. You think USD CAD 126? If you remember, we said several days ago that the Canadian dollar was definitely the weakest currency against the dollar, so it would be the best long once we got a reversal higher. And where the hell is it? Here it is. So it's not surprising that it had such a sharp move because it was the best candidate to be long dollar when we saw a bullish reversal. Now we form this rectangle, right? The rectangle's target points to 124. Look at this previous descending channel as well, and its trend line resistance passing more or less from there, right? So bottom line, what I'm trying to say here is, if we see the unfolding of this counter trend move last longer, which we might, right? I think it can play out like this. So we need to break through 124 and this trend line resistance to open up the next upside target. And the next upside target can easily be 127.5. So I think that 126, which I know why you're looking at 126, we had this consolidation over there, is probably even a conservative target once we break through 124. I think we can extend easily to 127.5. Keep that in mind. Okay. So yeah, I think it's easily doable. A question about Aussie support as well. So let's have a look at the Aussie. We confirm a break below this potential symmetrical triangle. I think that we open the door for a move towards 73.80, the 61.8 of the last move higher. Also, more or less where the channel, because an alternative interpretation is this being a descending channel, the descending channel trend line support passes. So I wouldn't be surprised to see a move towards 73.5 roughly. So that's easily another downside target. And if more time passes, then this descending channel trend line support keeps moving lower. So even 73 cents, right? So keep that in mind. I think we can easily do that. And as I explained before, I think that the Kiwi looked much better for something like this. And I do believe that Kiwi can easily revisit the 67 cent area now that we've done this. So any rebound in these currencies against the dollar in the short term, like the Aussie, the Kiwi, the Canadian, should probably be sold for at least one more leg lower if you're talking about Aussie USD, Kiwi USD, or a leg higher if we're talking about USD CAD, USD NOK, so on and so forth. I would find it extremely surprising if the moves we saw yesterday just faded away after 1-2 days, and that was it. We continued higher directly from there. You know how bearish I am the dollar longer term, but that doesn't make me blind to the price action or biased, right? I'm going to read the chart the way I'm experience has taught me to read the chart, irrespective of what are the assets or the fundamentals behind it. And one of the reasons is because I've been in the markets for so many years, and I know that market participants can be stupid for a much longer period of time than somebody would assume, and they can misprice, especially in an environment that is so much influenced by outside forces. It's surprising for how long the market can misprice things, right? So I mean, I have absolutely no problems seeing moves going against my fundamental bias for long periods of time. I know it happens. I know it's going to happen again and again and again. Bye-bye, mate. Question about copper. Oh, sorry. Wrong chart. Copper, here it is. Same thing with palladium. Copper at support as we speak. Now, if we break through this channel, which so far is perfectly corrective, then we're talking about finally a much deeper corrective move lower, right? So we slice through this. So let me rework this a little bit. So from where we currently are, these are the two likely outcomes, right? We hold the support, we can easily see a new high. We slice through the support, the simple shallow corrective pullback scenario goes out of the window, and we're looking for a much deeper correction, which is a very healthy thing to happen eventually. We've had a non-stop move from 19th of March of 2020 until when did we top out? 10th of May, right? So we're talking about a 14-month non-stop bullish move. At some point, it has to have a deep correction. So we break through this channel trend line support. The next area of support is at 385, and we take it from there. Below 385, we open the door for a revisit of 340, so on and so forth. Okay. Thanks. Trading View and real yields. Type in US Treasury to real yield. Is that accurate? US Treasury. What is this? Is there such a... I don't see such a ticker, and it would surprise me, to be honest. Oh, you meant it as a general rule. So you meant like nominal yields. The actual mathematic way to calculate it is a very simple subtraction. You subtract inflation from nominal yield. So in essence, how you find real yields is very simple. You go to the 10-year yield, for example. There it is. How much is it at the moment? 1.54. Okay. And you go to Fred. You find inflation, reported inflation anyhow. So let's say inflation is 3%. So it's like 1.54 minus 3%. That's the real yield. Negative roughly 1.5%, let's say, for the 10-year. That's it. So the 10-year real yields are minus 1.5%. So that's how you calculate. That's simple as that. X. X is breaking down, mate. Be very, very careful. X is breaking down. We talked about this some time ago. We talked about two possible scenarios, a breakdown from there or another move higher and then a breakdown, because this is an ascending wedge. That's the reason, right? We did get the move higher. The move higher didn't even manage to produce a higher high. So first indication that momentum was clearly changing, right? Which we could see in the RSI as well. And we're now breaking down. In my opinion, this is a very bearish development, which should lead us back towards 16, if confirmed, because we're still midday, right? So keep that in mind. Yeah, it looks good as a short. If we confirm this breakdown, it looks good for a short. Looks good for a short. Spots to add to gold and silver miners. Yes, absolutely. Gold and silver miners. Good question. So GDX. So look at this. Gap down below this. So what do we know now? That this is not a bull flag, right? Impulsive move lower. So now we have to reassess. Did this answer your question? That's where I think the GDX is likely headed. And the SLV just got rejected from this triangle as silver did. So some kind of a deeper correction before it finally breaks higher. Sorry, wrong instrument. SIL, sorry. So SIL was hadn't broken out. It was in this descending channel. Last time we checked it, we said the obvious thing. I remember that I said from a risk reward perspective, it was a good short, but of course, if we broke higher, that was a very bullish development. We got rejected. So, how deep can we go? Depends. We can go there. We can go there. Oh, come on. Or we can go all the way back to the channel. Right, so pick your poison here. I very, very much doubt we're going to break through this. So I don't think we're going to see a move below 37. Right, so the closer we get to 37, the better the buying opportunity, in my opinion. Phew, I think I covered everything. Okay, that was a long webinar.
Well done,
MU.
Steve. Well done.
MU. Last one. MU. Is that Manchester United? Oh, yeah, I thought so. Oh, we actually had a look at it some time ago. And I did think that eventually this will break higher, lower, due to this divergence we had. Oop, I didn't mean to do that. I meant to do this. Let's see. I think we're headed higher eventually, but the problem is there is no really strong support until we get back to 62, whatever that is. So I do think that there is a real possibility that the market is going to move something, is going to do something like that. Now, this is not necessarily the corrective pattern. Let me explain. The correction might end up being this channel, and we just might spend like a little bit more time consolidating here, right? Boop, 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 you know, something like this, right? Yeah, that's what I think about Manchester United. So bottom line, probably a corrective
It's
move
not
lower.
Manchester United, by the way. It's Micron
Ah, it's
Technology.
Micron Technology. Yeah, what's the ticker for Manchester United, by the way? Because they are.
I don't know. I don't know.
Perhaps it's Man U then. Yeah. Yeah, this has to be it. Manu. Yeah. Yeah, probably it is. Okay, this look, by the way, for any of you that want to trade this looks very bearish in the short term. So don't buy Manchester United. Okay, so have a lovely rest of the day, guys, girls.
Thanks, everybody. Thanks, Steve.
Bye-bye.